All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today is a quick tip for my DMV area tax. So for those of you who don't know what the DMV is, it's not Division of Motor Vehicles. It's actually as a Washington D.C., Maryland, and Virginia area. So it's something that was just quirky. I was working on a tax return for a client that resides in that area. And the funky thing here with DC are in their taxes. So for those of you who don't know, the way that the DMV area works as far as like local taxes are concerned, they essentially have reciprocity agreements in the sense that you work in DC, and I'm sure this happens a lot with folks that are in that area. You may work in DC, but you don't live in DC. You may live in either Virginia or Maryland. So the three territories have an agreement where if you work in DC, you don't pay DC taxes. You only pay where you live. So a quirky thing that I ran into is that you're in a situation where let's say that you lived in DC at one point and you had DC taxes withheld from your check, and then let's say that you moved from DC into either Maryland or Virginia. And now you don't change your address with your job. So what happens is you continue to have DC taxes taken out of your check as opposed to wherever you moved. And you have to go and obtain that back. Continue to have DC taxes, but you don't owe DC taxes once you actually move. But what happens at tax time is you have to file with DC to get that money back. Because those taxes were due to Maryland or Virginia, you had DC taxes instead. You still have to pay those taxes to either Maryland or Virginia, but anything that was withheld, as far as DC is concerned, you have to go and get that back from DC. So it creates a little bit of an issue when that happens for a couple of reasons. One, and anyone that's with DC, you're going to have to let me know why you do this. But for one, when you file that return to get your money back from DC, you have to file that by paper. Now, I'm filming this in 2024, and I still don't know why in 2024 we still have to file tax returns by paper. But I guess if you're a resident, you could e-file a tax return. But if you are a non-resident looking to your money back from them, you have to file by paper. So maybe I've just answered my own question. Maybe DC is not in a rush to give you your money back, and they want to make you jump through a few hoops. But I find that pretty annoying because I've had to do that for a couple of clients. And it seems like they're doing that to make it pretty hard for you to get your money back. So that's one issue why, if you do move, you want to make sure that you just have your withholdings done appropriately once you move. And if you find yourself in a situation, because I've had this happen times with clients where the offices in DC, they never lived in DC, but DC taxes were taken out. And it shouldn't work that way. So you're going to want to fix that, because otherwise you're going to have to file something on paper to get that money back. The other issue that it creates, it actually costs you a few dollars as well with your home state that you're in, because DC taxes were never supposed to be withheld. And because you're not supposed to pay any DC taxes if you don't live there, your home state is expecting you to pay enough taxes over the course of the year. And with most states, this happens with the IRS as well. With most states, there's what's called an underpayment penalty. So even if you file your taxes and wind up having to owe, and you pay that bill on time, say April 15th, there is still a penalty associated with not paying enough taxes over the course of the year. So the jurisdiction, whether that be the IRS or the state, they're expecting you to pay those taxes over the course of the year and not necessarily pay in one lump sum. So for those of you that have a W-2, you're paying over the course of the year as taxes withheld from your check. For those that are self-employed, then the expectation is that you make payments over the course of the year, mainly in the form of quarterly payments. So if you don't do either one of those things, don't have any proper withholdings, or don't make estimated payments, you'll get charged, not a lot, but nonetheless, you'll get charged a few dollars for simply not paying enough over the course of the year. It doesn't matter if you pay the bill in full by April 15th, you still get charged a few dollars for not paying over time. So they do penalize you for that. So going back to our example here is that if you had your DC tax is taken out and you don't live there, then what happens is that state, whether that be with most folks, it will be either Maryland or Virginia, will now charge you for payment. So the lesson here is that it actually costs you a few dollars for simply not having the proper state taxes being withheld from your check. So you don't want to make sure that if you are in the DMV area, just make sure you don't have DC taxes withheld from your check if you don't live in DC. So because it can cost you a few dollars and you got to go through a few more hoops to get that money back. Just a quirky thing that I learned working with some clients working in the DMV area. So I hope this helps. So if you have any more questions about this particular topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right, that's all for now, and I'll talk to you in the next one.